How do you structure a first meeting with a potential investor that has registered interest or expressed interest in your business? So this is a question that we're commonly asked, and one that, a lot of founders, even though we get asked a lot of founders basically just fly by the seat of the pants in going through this process. Now, from our perspective, if you've been following us for any period of time, everything we're trying to do is how do you take capital raising from a mysterious art to an actual process, right? So what I'm going to do now is going to break down for you the key steps in structuring that first conversation with a potential investor. And I even highly recommend that you have not almost a script, but a structure in front of you to help you follow it, because one of the biggest challenges that we face as founders is we have the ability to waffle. And if you're not from Australia, waffling means talk more than what we should be, right? So very common for all of us. It's very natural. So if you have a structure in front of you, it makes it a lot more straightforward for the investor, and you can keep the conversation on track. So the first step is you've scheduled a conversation with a potential investor, and you're about to have that call. At the start of the call, it's always sort of pleasant, nice, 1 to 2 minutes of sort of pleasantries exchanged. That's fine. Then what I found is that an efficient way to do it, and this was actually taught to me and I found it quite effective, is to, at a first step, run through an agenda. So the first step is hi, John, or hi, Mary. Great to have a chat. Appreciate you expressing interest in our company and in our capital raise. So just with this call, just want to let you know, the first thing I do, just as a bit of an agenda, is firstly, I want to understand a little bit about yourself, your background, and sort of the types of opportunities you normally like to invest into. Then, I said, I'm happy to go through any questions you may have, because obviously I assume by now you've gone through my documents and you've looked at my sort of frequently asked questions, etc. And then what I'll do is I typically go through the three, what we see is the three key growth drivers for the business, some key inflection points and milestones for the business as well that we see that can impact the valuation going forward. And then also what we see as potential likely scenarios for exits or for returns on funds. So the call shouldn't go for longer than 30 minutes because obviously I respect your time, but that's going to be the agenda for today. Is that cool with you? And then obviously that from that, they should be okay with that because at least gives a structure for how that call is going to go. Now, when I'm trying to find out about the investor, first thing I want to understand is what they already know about my business, right? I think that's really important to know because if they already understand about my business and my area, then, I'm curious to know what their perception is, because this whole game is alignment of thesis, right? As far as I've got a thesis for what's the opportunity for my business, for my product, for my software, for whatever it may be, we've got a thesis on that, right? And the perspective is the investor will have their own thesis for the opportunity. And typically what you'll find, if there's an alignment of thesis, right, and there's an agreement in the way in which you're actually approaching that thesis to grow the business, then you're likely to have an investment, right? So once again, this game is about alignment of thesis, and also the second step would be alignment of strategy going forward. So now obviously all the other things we've talked about, capital raising, brand, that's what brings a potential investor to generate interest. Now it's about the breakdown of the conversation. So first area, I said I want them to understand what they already know about my business. Then I want to understand the thesis about the problem that I'm actually solving. Then I want to understand what their perspective is on the opportunity as well, like what they believe is the size of the opportunity, because that's important to me. Now, the next one is I love to ask the question, say, have you invested in other sort of private companies or fintech companies or marketplace companies beforehand? The reason why I ask that is just because I love to know if they've invested into other into other businesses in my space or in my area. And then also I'd love to get some sort of gauge on how much they typically invest into those types of businesses. Now, I do this in such a way that, I'm not trying to pry too much into their personal info, but it's all from a complete perspective of them understanding, me understanding their thesis for my space, and also understanding have they already backed opportunities sort of in the area as well. Now, I'm not looking for, just so you understand, I'm not trying to look for if they've invested into my competition. I'm just trying to understand their overall thesis and what they're already investing into, right? Because then that really helps me understand their perspective. So they're the things that we're sort of keen to understand. We want to know their thesis on the problem of solving, keen to understand their perspective on the opportunity. Then also, have they invested in other opportunities in a fintech or in a marketplace? Whatever your sector is, then that's what you want to ask. And then, roughly what amounts do they typically look to invest when they participate in opportunities? So all those questions are really helpful for me because I want to understand a little bit more about them. And then also I'd love to understand I want to understand their investment style. Is it active? Is it passive? Do they like to take a more significant amount, sit on the board seat, etc.? Because they typically know what they want, right? Sometimes people vary from opportunity to opportunity, which is completely fine, but they typically know what they want. But really, once again, the whole goal is to discover alignment. Now, that's all the first step. So really the first half of the conversation should be them sort of, letting you know more about what their thoughts are and what their perspective is, etc. The second step is then typically what I have in front of me is I have, okay, well, here is our 3 key growth drivers for our business, right? Now that's important for me because they want to understand, okay, well, how is my funds going to be translated into growth? Right? How am I investing into your company? And those funds are going to be utilized to accelerate the growth of the business or create an exponential growth opportunity. And that's effectively what you're communicating. If you're a bit earlier, then, obviously they're trying to understand how do those funds get to the stage where it's another inflection point, which leads on to the next one. What do you see as inflection points for the company? So typically what's an ideal scenario is you need to identify the 3 key growth drivers and what you see as 3 key highlights that become inflection points for the potential investor. And then also the likely paths to exit. Right now, if you can structure this, right, typically for me, I just have it on a sheet in front of me. What it does is it helps keep me focused. Now, the second part that I mentioned is letting them ask any questions. That is completely free reign for them to ask any questions that they may have about my business, about the opportunity, about the strategy, all that sort of stuff. That is completely free reign for them to ask whatever questions they want. Right. And then the third step is me then going through the 3 key growth drivers. What I see is a sort of 2 or 3 top key inflection points or milestones for me to achieve in the next sort of 12 to 24 months. And then the next one is the likely scenarios for exit for the potential investor. Now, what's really important when you're sort of after you've gone through those elements, as I said, you got to do your best not to talk outside of this because you end up just talking more and more, and that's not the objective in the first phone call. The first phone call is to keep it to at least 30 minutes, right? And at the end of that, then at the end of that, typically they'll want to obviously go and have a look further through the information and then sort of maybe look for more questions that they may have. Or go through your FAQs again, which is completely fine, etc. And then you're really, the way you finish the call is by setting up a second call. Typically, I'd say about a week is enough time, right? So then they've got enough time to sort of go through the notes that they may have taken from the first meeting, spend some more time in your deal room, and also go through your FAQs. So that is the recommended structure that we talk to our clients about how they approach their first phone call with a potential investor. So let's just recap. So the first step is to create an agenda, to mention that there's going to be an agenda for the phone call. The first step is getting to know a little bit more about them. The second step, and with that getting to know more about them, we're looking to discover alignment. The second step is then giving them the opportunity to ask any questions that they may have. The third step is then taking through the 3 key growth drivers, the 2 to 3 key milestones or inflection points that will really significantly impact the valuation, and then the likely potential scenarios for exit. And then once again, just highlighting, do not go more than 30 minutes. And then at a final step, set up the second call. So I hope that's helpful. I know it's an intimidating thing when you go into your first phone call with an investor. So at least if you've taken some notes on this structure, it really helps you sort of just be a bit more comfortable so you can be yourself in the actual conversation and actually really more look for connection and alignment with the potential investor rather than being too focused about, oh, are they going to invest? Are they interested? All that sort of stuff that normally goes through your mind. Just trying to get rid of that sort of white noise and just focus on actually what's really important for the call.